Good evening, everyone. I hope everyone's doing well on this Wednesday, middle of the week, March the 12th. We had the inflation report this morning, and just as I said on Monday, that the forecast was last month was 3, forecast was 2.9. I said we probably would get 2.8, and that's exactly what we got today. And I went over why, so you can go back and watch that video back on Monday. I explained where the data comes from that imply that we probably would go down a little bit more than expected, which we did. The market didn't really react a whole lot to that, although there are some signs that we may get a brief rally pretty soon. We'll look at that in a minute. But first of all, as always, I am still not a financial advisor. So anything I say is for educational purposes only. I'm not making any recommendations to buy or sell anything. Nobody knows where the market is going, including me. So I just show you the data and you can make your own decisions. So let's jump into it, see what's happened today. First, as always, we'll jump over to the homepage. This is the website, breakpointtrading.net. You can get to the YouTube channel from here. And also the weekly newsletter I put this out over the weekend. So that's free. You can just click on that. And the homepage is free as well. But it went down again a little bit, just slightly today. So let's look at that real quick. So you can see a couple of bear signals, a bullish signals, actually a long-term bull signal we got today. So kind of an even split between bull and bear. So even though it ticked down slightly, you can see the color codes here. Nothing has really turned green yet. We'd like to see it turn all green like this, or like this from back in December, but hasn't quite happened. And notice the short-term signal is now starting to go back down again. So even with a little bit of reprieve today, it might have felt like the market was ready to scream higher, but it didn't. And nothing here is saying that it will. But there are some potential areas that we can look at. So let's go back to the homepage real quick. And before I jump into the rest of this, I just want to give a shout out to the people from One Rental at a Time. I mentioned this a couple of days ago. I do a Sunday show with Mike Zuber, who started One Rental at a Time as a real estate. It's a real estate channel. So if you want to learn how to buy investment properties, it's a really great place to go. But once a week, I do an interview with Mike Zuber, and I'll show you his website. It's right here, One Rental at a Time. That's him. He is currently, and this is me. This is the one I did on Sunday, although he wasn't here, but I did it solo. He is currently on a cruise somewhere in the Eastern Asia. So I think he's somewhere between Taiwan and Japan right now. It's about 12 hours ahead, so it's 5:30 in the morning for him. 5:30 right now is the time that I'm doing this. But if you want to learn about real estate, this is a great place to go. He's got lots of great people that he interviews and talks to about their perspective and ways that they have bought properties and what they're doing. So I highly recommend checking that out. So let's go back and take a look at first, we'll do the dashboard. Oh, no, first I'm going to do the Dow Theory because I covered this yesterday. So let's just take a look at it and see what it looks like today. I'm not going to do this every day, but we'll look at it occasionally. So this is the old Dow Theory. See, they actually went down a little bit today, but they bounced back by the end. So those long tails that we're getting the last 3 days imply that the market sold off, but at the end of the day, it came back again. So a lot of times that's professional traders, that's Wall Street, starting to take positions again, hoping for a rally. And I'm expecting a rally as well. I've talked about that before. But that's the old Dow Theory. Let's look at equal weighted NASDAQ 100. By the way, the reason I do equal weighted is because the top 10 stocks, which are on my Magnificent 7 trend model, the top 10 make up more than 50% of the QQQ, the weighted, cap weighted. And I don't want to have that kind of weighting. I just want to compare them, leveling the playing field, making them all equal. So according to Dow Theory, if the NASDAQ is going up, then the S&P should also be going up. That confirms the uptrend. But you can see what happened here in the middle of February. The NASDAQ 100 made a new high, but the S&P did not. So that is non-confirming. Same thing with NASDAQ 100 and the semiconductors. NASDAQ 100 made a new high, semis did not. And then finally, communication services made a new high. And these vertical lines are the same date on both charts. And semiconductors did not. I'm sorry, this is internet. So this is communication services, XLC, and internet. So all four of those were giving us advance warning in mid-February that the market was ready to roll over, even as this was making new highs, and this didn't. That was the big warning sign right there. So I'll check in on this every once in a while, see how it looks. The other thing that I like to check on every so often, I update this once a week, so it hasn't been updated today, but on the charts page for subscribers, on the index button right here, you can see this is an idea that I got from John Carter. This is John Carter's squeeze that you can find on Thinkorswim or TradingView or other platforms. But he mentioned that back in November, December of 21, when the market was making new highs, momentum was starting to decline. So if it's dark blue, it means it's lower than the previous month. This is a monthly chart. And I mentioned that at the time that he said this, which was in November, this big light blue bar, it had not started to do that yet. But he said this is what he's expecting to see. And he also said that he wants to see 2 consecutive months of declining momentum before he is convinced that the market is probably in for a long downtrend. So we got those in December and January. You can see February that month is finished, so it has a dark blue one. So far in March, we're actually lower than February. So, and I'll update this again on Friday. It's right on the website. All right, let's go to the dashboard, take a look at what the markets are doing today. You can see equities kind of pretty much came down, went up, ended a little bit lower, but pretty close. This is the Dow. S&P was a little bit higher, but didn't really do too much. You can see this is the intraday chart right here. Went down, came up, bounced around, went sideways, didn't really move much today, even with that tame CPI report. Didn't really move too much. Okay, so bonds, 10-year went up slightly, 20-year went down slightly. Commodities, gold was up nicely. Silver was up as well. And crypto, Bitcoin, pretty much flat. So didn't go one way or the other. Had a nice day yesterday, the day before. So today it just was consolidating, moving sideways. All right, let's take a look at the sectors down here, and you can see the advancers, decliners. You can see lots of advancers. The other thing that is even more telling for me is that the top 3 for today of the top 10, or actually of all of the sectors, are all aggressive. Technology, consumer discretionary, and communication services, pretty much in that order, are the aggressive sectors. They're all in the top today. That's one of those signs that I mentioned that might point to a brief rally that we might get. Now, staples actually dropped even more. Staples dropped a lot. So that's rotation back out of defensive and back into aggressive. If we look at the relative rotation graph, this is always fun to look at. You can see this is financials. Right now, it's set for a weekly period. I'm going to change that to a daily, and we'll look at 3 months, see what that looks like. And you can see that here's technology over here and discretionary. They're starting to make a move. But if we go even closer and go to a 60-minute chart, let's see what that looks like. So now on a 60-minute chart, so this basically is 5 hours worth. So 5 dots is 5 hours. So this shows you what it did for 5 hours today. Let's look at this for 7 hours, which basically encompasses the end of yesterday and all of today. So there's what it looks like. Technology now in leading area, discretionary, making a move that direction. Here's communication services, which is the internet stocks right down here, starting to make a move that way as well. And all of the defensive ones are moving over to the lagging area. So that is rotation. That right there shows you rotation. We can actually move this. Let's move it back to start on Monday. So here's Monday. I'm just going to move it to the right, and you'll see how things move this week so far. It's just 3 days. And this is a 1 hour. Each one of these is 1 hour. So you can see mostly defensive. Then we get to yesterday, the open yesterday, still defensive. But now look what happened at about 1 o'clock. 1 o'clock, all the defensive sectors are starting to move lower, and all of the aggressive sectors over here on the left are starting to move up into improving and may even be heading towards the leading area. So this is as of 3 o'clock yesterday. We'll go into today. So here's starting today. This is this morning. You can see defensive is still heading down. And look at technology now in the leading area. So this is as of 1 o'clock today. And right up to the close right there. So that's how it ended. You can see all the defensive areas. That's rotation. Wall Street's rotating out of the defensive and into the aggressive. And that may indicate that we might get a little bit of a rally. Now, there's no guarantee, of course, but we'll see. All right, so these are the earnings. Marvell is on here. They had earnings on the 5th. This is one of the stocks someone wanted me to look at. I'll take a look at that closer up in a second. The interesting ones over here, the top 10 industry groups for today: semiconductors, internet. Those two are the interesting ones for me. Those are both. This is communication services, and this is technology right here. What else? And software. We've got software in there too. Electrical components. There's another technology name. So let's go back and take a look at the stocks on the website under the charts page. Each of these industry groups, you can look at the stocks for each one. So let's look at semiconductors first and see which ones did the best today. So these are the best performers for the day. Micron, second best performer of the day, up almost 7.5% for today. NVIDIA making a comeback right down here. So NVIDIA making a move right now. I'm looking for Marvell since somebody asked about that. There's Himax. I have a friend that likes that one. Marvell, I might have passed it, but at any rate, probably on here somewhere. And you can go back and look at for the full week. And you can see that really it was today. Today was the big day. Today was the day that a lot of these made a move. All right, let's go back and take a look at software. Software for today, no big names jump out at me on here. Here's Palantir. Palantir up 7% today. SoundHound up almost 7%. So those are the software names. They were in the top 10. Was it electronic components? Let's see, we've got semiconductors, internet I want to look at, software, and electrical components and equipment. Let's do that first. Electronic components right here. So there's the ones that made the move today. This one here was a short squeeze that I sent out last week. And internet group is down here. There's the names for today. So Reddit made a move, 6.5% today. Pinterest up 6%. Rumble up almost 6%. Spotify 5%. So here's Netflix making a move now again. Netflix up 2.75%. Meta right there. DoorDash, Google. So those are the ones that were moving today. So you can see that it looks like some of the large cap and even overall tech stocks are starting to move today. We'll see if that continues tomorrow. Tomorrow is the PPI report, and if we get a tame one on that as well. Now, unfortunately, right now, what that means is the Fed probably won't do anything. They probably won't cut, and they probably won't raise. We had a fairly tame jobs number, and we had a declining, less than expected inflation report today. If we get another less than expected report on the PPI, then there's no reason for the Fed to cut or raise. There's not really no reason for them to do anything right now. So most likely they're going to stay right where they are. And that's probably why the market didn't really react much today. So I think it's going to be more a situation of a lot of really oversold stocks right now. And I think traders are going to start jumping into some of those. I've warned before that that's typically what happens. As a matter of fact, one of the things that, since I talked about Dow Theory yesterday, one of the things that I added, actually, I talked about the bottom finder yesterday. One of the things that I added, other than the VXN, as was suggested from a subscriber, I did add that here to the NASDAQ 100. But I also added what these look like back in 2022. So if you want to see what the bottom finder looked like back in 2022, you can click on that. This is the NASDAQ. Now, the percent of stocks above their 20-day had not started tracking until the middle of the year in 22. So I don't have any data before that. But this is the cyclical bear market that we went through that started back here in January, basically, of 22. We were hitting all-time highs back here in November and December. January, the market started going down. You can see where the color changes from green to red right here in the beginning of February. So that was a first major warning sign that it was time to move aside. But more importantly, let's take a look at what the bottom finder looked like. So the market went down right here and it hit a bottom. And the important thing to notice about this is when these things happen. So it hits bottoms here below 20%, below 20% on the 50-day. I don't have anything for the 20-day up here, but it hit below 50% right here. That tells you that we might be getting close to a bottom. And we did right here. We bounced, but you notice it didn't even couldn't make it back above the 200-day moving average. And it went up here all the way up to 75, which is the red line. And then it started going back down again. And then it went down below 20 again here. This was in May. And it bounced again. Went below, even lower this time. In this case, I think it was down like at 8 or 9% right there. And that was in June. And that in June of 22, I saw a lot of people saying that's the bottom. Tom Bowley, for those that follow him, was saying that is the bottom. He said, I'm calling a bottom. It was in June of 22. And then the Fed meeting happened over here in August, where Powell said there's more pain ahead. And the market decided to go down one more time. And notice where it went over here for the 50. And now you can look at the 20 as well. Both of these were down at like 4%. Down here, stocks above their 50-day moving average was around 3 or 4%. That means only 3 or 4 names were still above their 50-day at this point right here. That is extremely oversold. But more importantly, notice, and this is a bullish divergence. This is the kind of things that you should look for. We got a low there and we got a lower low there, but on the stocks above their 20 and 50, we got a lower low on this one, but we got a higher low on this one. So that says the market made a new low, but it did so with more stocks getting above their 20. So Wall Street was starting to take positions right here. That's the way to look at this. Don't look at it just strictly that it's down here and that means that's the bottom. You want to look at what the trend looks like. You want to look at the divergences. So we went back down October. By the way, most bear markets end in October, as this one did. The bull market we're in now started in October of 23. So you can kind of expect that to happen towards the last week or two of October. If we're in a long bear market, that's the time when typically rallies start happening. But using this bottom finder will show you that these started to move up even as the market made a new low. And the 200 was way down here below 10% as well. When we get down to these levels, if we get down to those levels, I'll show you how to find the stocks, find those 3 or 4 stocks that were still strong. And of course, the VIX in this case is the VXN. So the VIX was definitely elevated. I think the VIX right now is looking more like this. We haven't really got this high yet. We're in fact, we're not even over 30 yet. So we're still back over here on the VIX. Like I said before, there's still more downside potentially left to go. And then look at the put call ratio. Go way up here to 1.5, 1.5. That means there is not only more puts being bought, but there are more leverage being used to buy puts. Even as the market, it was just going sideways. It was actually starting to make some higher lows. This one was a little bit higher. This one was a little bit higher. But at the same time, more people were buying puts. So that's what you want. You want to see the put buying way, way up here because that means the selling is almost over. So anyway, that's 2022. I just thought I would put that on the website for those that are interested. I have one for the S&P as well. Same kind of thing. You can compare it to what these look like today. Today's are right above it. So today, these two are for today's view. So just thought that was interesting. Somebody mentioned the bullish percent index. And so what I did was I added the bullish percent for each of the sectors. And they said, it's interesting to look at those, not just on the index, but on the sectors too. So if we look at the bullish percent and the bullish percent index, I've thought about doing a technical Tuesday, but it's based on let me look this up for a second. I'll go to the chart school. If you are using stock charts, you can go and look up anything on here. So it's based on point and figure signals. So bullish percent index is based on, if there's anybody out there using point and figure signals, this is an old style, mostly using paper and pencil years and years ago, but now it's automated, of course. Basically, it just you put an X for when there's an up day, and you put a 0 or an O for when there's a down day. And that tells you where the buy and sell signals are. So that's what the bullish percent index is based on. I'm not going to go into detail on that. It's rather complicated, probably even too much for a technical Tuesday. But at any rate, this chart down here is based on that point and figure. It shows you the number of bullish boxes, if you will, versus bearish ones. So you can see right here where it started to cross over. This went below the 50-day, and then it went below 0 right here, right in this area. So that's just a confirmation signal, confirming that everything was heading down. It did tick up slightly today, so that might be positive. We'll see what happens tomorrow. But I put this on all the sectors on here, so you can look at it for communication services. You can see it's been below 0 for a while. The 50-day moving average is rolling over, trending down. So bullish percent index is implying that there are more bears than bulls right now. But and this one did not tick higher, even though the price did. So anyway, I just thought I'd throw that out there. One other thing that somebody mentioned was on the risk on, risk off chart. And he made a really good point, and I've actually added it to the chart as a result because it was pretty interesting. Right down here is risk on, risk off on a daily view. So what I added in was junk bonds versus high yield corporate bonds. So this is what traders, if they are risk on, they're more willing to buy junk bonds rather than high yield corporate bonds. But you can see from all the way back here in July, we really didn't know that it was a downtrend and probably till September, but it continued to go down and then it accelerated right here in February. So this is clearly risk off. Big traders are getting out of junk bonds and moving more into high yield corporate bonds. The other things on here is this is junk bonds versus 20-year treasuries. That's going down. High yield corporate bonds versus 7 to 10 years. That's going down. Growth versus value is going down. Notice how these especially right here, and discretionary versus staples have curved back up just in the last day or two. Now, it needs to break the downtrend line. So it's not confirming that it's really starting a rally yet. But it's one more of those signs that I mentioned, that there might be some signs that a rally might be coming up here soon. So anyway, that's something that I added to the website. If you want to check that out, it's right on the charts page in the left-hand column, all the way down near the bottom, close to the Hindenburg omen. I'm not going to talk about that today. All right. So what else? I think I covered everything that I wanted except for the stocks. So let's take a look at some of the stocks that people asked me about. And well, if we look at my top 10 list real quick, see there's Palantir was in the top 10 today, up 7%. Robinhood, SoundHound in the top 10. In the bottom, Udemy was the very bottom. And let's see if there's anything that jumps out at me. ASTS had been doing well. It was in this close to the bottom. Walmart's down there. Actually, really, really falling off with Walmart. Procter and Gamble. These are all staple stocks. These are all the defensive areas. BJ's, all defensive areas. Harris, McDonald's, another defensive. So those are all falling off today. Hims down there too. It looks like it might be bottoming out. All right. So let's take a look at a couple of stocks that people asked about. So one is Marvell. As with all the rest of the semiconductors, has had a terrible time. It's below all the moving averages, including the 200. So it has a lot of overhead resistance that it has to get through. There's a big gap right there, which probably was earnings. Earnings were on March 5th. So looks like they missed earnings, big gap down. It likely could go up and fill the gap, but probably will get rejected right here at the 200, and the 21 will be coming down to the 200 as well. So both of those is right where it's going to probably meet, right there at about 85. And that probably will be about the time that the rest of the market rallies to about the same point, to about the 21 day. So might have a short-term bounce on Marvell. You can do with that as you will. All right, the next couple are, I don't know anything about this one. FD. This is Fidelity Core Dividend ETF. So this is a dividend ETF. The person said they had a 15% stop, but I don't know where, 15% from where. So I'm going to just look at the chart and tell you what I see. It's sitting right on the 200-day, just like the rest of the market. It's got these long tails on it, which means it came back at the end of the day. Let's see if yeah. So sitting right on the 200-day. So this one I think is going to trend with the market. So right now it's looks like it's sitting right on support as well. Put that line in right here. Right there. There's a support line. So, and the 200-day. So just like everything else, it's extremely oversold, had huge volume. So that could be a washout right there. And with long tails, so it came back at the end of the day. So it might be going to rally with the rest of the market. We shall see. All right, the next one is Verizon. These are all good dividend stocks. So there's Verizon sitting below the 50-day. It's had a really good run. I'm sorry, Visa, not Verizon. Verizon's VZ. Visa's had a really good run. For those that like to do trend lines, I covered trend lines in a technical Tuesday previously, but I'm going to draw a trend line here, basically right across those lows. And what you might notice is that it roughly follows the 50-day moving average. Now the trend line is below the 50-day right now, but that is a key area of support. So likely will start to head higher if not with a rally with the rest of the market. It's had a really good run, so the chart looks great right now. And you can see every time it comes down to the 50, it gets bought. So this is the point right here where Wall Street, if they're still want to stay in the stock, this is the time that they're going to be adding. If they are not, if they decide that the rest of the market's going to fall and they want to start divesting out of these stocks, then it's not going to hold here. This is a good one to really give you a good test of what the rest of the market is going to do. Will it hold above the cloud right here or drop below it? So this will be an interesting one to watch the next few days. And the last one is another dividend stock, KMI, and he said this is for a long-term hold. And KMI also looked great. Had a big run up right here. Earnings were on January 22nd, so that's probably right here. Earnings probably right there. Hopefully you can start to pick out the resistance areas. So there's support right there. There's an open gap right here, top and bottom of the gap. So if this area doesn't hold 25.50 roughly, then down here between 24.50 and 25 needs to hold. And if that doesn't, then it likely is going to fall quite a bit. But overall, it looks pretty good. And especially if this is I actually looked to see if it was on our dividend list, and it's not one that's on the dividend list. The dividend is 4.34%. I'm not sure why it didn't make that list, actually. Don't know. But nice dividend yield. And it is optionable as well. And this is the weekly chart. So on a weekly, you can see it's a little more clear. It's sitting right on the 21-week moving average. And that's usually where it's probably going to bounce higher. That's what it looks like to me. So anyway, good luck with those. That's pretty much it for today. Thanks for watching. Stay safe out there. And let me know if there's anything else you want me to check out. Please like and subscribe on the channel. I think I'm like, I don't know, 25 subscriptions away from 1,000. Let's see if we can hit 1,000 before Mr. Zuber comes back from his cruise, which I think is this Sunday. That's might be too much to ask, but at any rate, thanks for watching. Really appreciate everybody's comments. Let me know if there's any questions or any stocks you want me to take a look at. Be happy to do that. Or any other topics, like some good suggestions came yesterday about bullish percent index and some things like that. So I really appreciate it. So thanks, everyone, and good luck trading.